Today, I'm going to reveal one of the most hidden, darkest, and bloodiest truths in the financial world. This truth involves a top-tier Wall Street giant, a massive $1.5 billion liquidation, and the ultimate manipulation of human nature. By the time you finish this video, your understanding of this market will be completely shattered. You will feel angry, you will feel a chill down your spine, and you might even want to smash your screen. But most importantly, you will know how to protect your wealth in the upcoming century massacre. At this very moment, Jane Street, the most secretive and predatory quantitative trading giant on Wall Street, is offloading silver worth a staggering $1.5 billion. $1.5 billion. Friends, this isn't 15 million or 150 million. This is a massive amount of capital capable of flipping the market table in an instant. What does this mean? It means they are currently the world's largest holders of paper silver. Jane Street controls a full 20 million shares of the Silver ETF, accounting for over 3.5% of the total global silver supply. You might shrug and say, what's the big deal? Big institutions buy and sell all the time. They have the money. They are just bullish or bearish, right? If you think that, you are dead wrong, because Jane Street is not a long-term value investor. They aren't Warren Buffett. They don't buy an asset and lock it in a safe for 20 years. Jane Street is one of the fastest, most aggressive, and most cold-blooded trading machines on this planet. Let's look at who these people really are. On Wall Street, you have traditional investment banks like Goldman Sachs and Morgan Stanley, or massive asset managers like BlackRock and Vanguard. But Jane Street is different. If you walked into their office, you wouldn't see traders in suits shouting into phones. You'd see geeks in t-shirts and flip-flops playing ping pong and drinking high-end coffee. Who are they? They are top PhDs in math, physics, and computer science from MIT, Harvard, and Princeton. They don't care about company fundamentals, industrial demand for silver, or what is actually happening in the world. Their entire operation revolves around three things: chasing order flow, exploiting market volatility, and most terrifyingly, manipulating human nature. This is a company built on algorithms and high-frequency trading. What is high-frequency trading? It means when you press the buy or sell button on your phone, you think your order goes straight to the exchange. Wrong. Your order information is captured by these giants at millisecond speeds. Before your order even executes, their supercomputers have already bought the asset ahead of you and sold it back to you at a slight markup. They are the highwaymen of modern finance, using fiber optics and complex mathematical models. They execute millions of trades daily, making pennies on each, but at a billion-dollar scale. It's a money printing machine. And now this monster has the largest public position in the world's largest silver ETF. Does that seem reasonable to you? A beast that hunts in milliseconds has suddenly hoarded enough chips to shake the entire market. This is like a vulture that usually eats carrion suddenly penning up the world's largest flock of sheep. They aren't planning to feed the sheep, they are preparing for a bloody slaughter. Now, let's look at the silver market itself. Among all financial assets, silver is a unique existence. It has been called the devil's metal since ancient times. Why? Because its volatility is extreme. It makes people rich overnight and bankrupt the next. The silver market is relatively small, making it a favorite playground for Wall Street sharks. Jane Street's $1.5 billion position is not passive holding. They are controlling the ownership of the entire ETF. And what is an ETF? It is the primary vehicle for retail investors, ordinary people, and you to invest in silver. Most people don't buy hundreds of kilograms of physical silver bars. They search for a silver ETF on their brokerage app and click buy. You think you're buying silver, but you're actually just buying paper issued by Wall Street. And now the dealer is the referee, the athlete, and the bookie. They hold the absolute advantage. This is a trap. If you have traded silver for a while, look closely at the current market. It exposes all the characteristics of a highly manipulated market. The first sign, the severe disconnect between paper and physical prices. If you go to a physical bullion store to buy silver bars or coins, you have to pay an extremely high premium, and often there's a shortage. Mints worldwide are working overtime, and industrial demand is exploding. But look at the paper silver price on your screen. It's suppressed in a range or even drifting lower. Does this fit basic economic common sense? It doesn't, because the quantity of paper silver can be printed infinitely. As long as Wall Street wants, they can create hundreds or thousands of times more paper silver than exists physically through derivatives and naked shorting. They use endless paper to suppress real physical wealth. The second sign, the sudden disappearance of liquidity. Have you ever experienced that moment of suffocating despair? You're watching the chart, the technical indicators look great, and the price is steady. Suddenly, without warning, the buying power evaporates. The numbers on the screen plummet, and a massive red candle crashes down, smashing through all support levels. Why? Is it bad news? No. It's because the big sharks withdrew all liquidity in that second, letting the price freefall to hit all the retail stop-loss orders. The third sign, violent and illogical price swings. Everything is fine during the day, but at night while everyone is sleeping, the price crashes. Or it crashes without any macro data or news, only to snap back a few hours later, leaving a long lower wick. This isn't market risk. In Wall Street terms, it's shaking out the weak hands. They are deliberately creating panic to scare you out of your positions. Now, put the pieces together. The largest holder, Jane Street, is not a believer in silver's value, but a quant firm designed to trigger and amplify volatility. This isn't a bullish or bearish signal. It is blatant manipulation. It is a declaration of war against you. If you think I'm being sensationalist or spreading conspiracy theories, look at the official records. The SEC and CFTC have long targeted these quantitative giants. Regulators have accused Jane Street of using correlated tools and aggressive expiration strategies. Let me translate that for you. They use the expiration dates of option contracts and 100x leverage in the derivatives market to dump or pump the market at specific moments. Suppose many call options are expiring today. If silver stays above a certain price, retail wins and Wall Street loses. Do you think the market makers will just pay up? Absolutely not. They will use their massive spot holdings to dump silver an hour before expiration, forcing the price below the strike price. Retail options become worthless and Wall Street pockets all the premiums. This is the aggressive expiration strategy. They don't need real silver, they just need control over the ETF and the options. This has been done repeatedly in stocks and derivatives. Over the last decade, how many banks have been fined for manipulating precious metals? JP Morgan traders were fined nearly $1 billion, and some even went to prison for spoofing. But here is the terrifying part. Those fines aren't punishments, they are operating costs. They make $10 billion, pay $1 billion in fines, change their name, upgrade the algorithm, and keep harvesting. Now, Jane Street's silver position is massive. 20 million shares, $1.5 billion. This is why I am warning you today. A high-frequency trading firm holding such a giant position makes natural price discovery impossible. When you are that big, every move you make causes a tsunami, and when you know you can cause a tsunami and profit from it, you will create one and surf on the bodies of retail investors. To help you understand how you are being harvested, imagine how their algorithms will drain your account over the coming months. Step 1. The illusion. Today, market sentiment is great, inflation is high, geopolitical tension is rising, and everyone thinks fiat currency is worthless. Retail sees gold hitting new highs and analysts shouting that silver will follow to $50 or $100. You get excited and pour your savings into silver ETFs or leveraged futures. Meanwhile, Jane Street's supercomputers are silently capturing this order flow. They won't dump immediately. They might even push the price up slightly to create a technical breakout. Your account shows a profit and you feel like a genius. You might even consider adding leverage. Step 2. The trap. The trend is established and retail money pours in. To protect profits or prevent liquidations, most of you set stop losses. You tell yourself, if it breaks yesterday's low, I'll exit. You think your stop loss is your shield, but to the supercomputers, your accounts are transparent. They see exactly where the stop losses are clustered. To them, you aren't investors. You are lambs who have already put your necks under the guillotine. Step 3, the kill. The slaughter never happens on a sunny day. It happens when liquidity is thinnest, maybe in the early morning as the Asian market opens. In that instant, Jane Street's algorithm activates. They dump a portion of their $1.5 billion stash. A waterfall appears on the chart. Step 4, the cascade. This waterfall hits the first level of stop losses, which are market sell orders. These forced sales push the price further down, hitting the next level of stop losses and triggering margin calls on leveraged accounts. The trend reverses instantly and is magnified 1,000 times. Liquidity vanishes. There are no buyers, only programmatic selling. The price drops like a plane that lost its engines. You sit there watching your account shrink by 30%, 50%, or hit zero in minutes. Your software might even lag due to the data surge. You are filled with panic and despair. Step 5, the cleanup. Just as you hit your breaking point and manually sell at the bottom with tears in your eyes, who is there to buy? Who is taking your blood-stained chips? The same entity that started the crash. Their short positions profit at the bottom, and they buy back the shares they dumped at a massive discount, perhaps even flipping to a long position. When it's over, the price slowly creeps back up like nothing happened, leaving only a long lower wick on the K-line. Retail investors spend days trying to understand what happened happened. News reports will say market correction due to economic data. Nonsense. It was a premeditated robbery. While you lick your wounds, Wall Street traders are celebrating with champagne in Manhattan, bought with your money. This is the reality of the silver market every day. Hearing this might make you want to quit forever. If you think that, you've fallen into their trap again. I'm tearing open this truth not to make you despair, but to help you find a way to survive and fight back. No machine is without weakness. Institutions harvest retail not because they are smarter, but because they exploit two human weaknesses: greed and fear. Their algorithms are designed to make you buy at the top and sell at the bottom. So the first thing you must do, stop overtrading, stop reacting emotionally. If you spend all day staring at 5-minute charts, you are the perfect prey. Every emotional trade you make sends money to their algorithms. You cannot beat a supercomputer in a micro time frame with your human brain. Silver, in the short term, is highly manipulated. Short-term movements have no technical logic. They are designed to trigger liquidations. You cannot win on their battlefield. To win, you must flip the board and move the battle to a field they fear. That weapon is time. This leads to the second thing you must recognize, the macro logic of gold and silver. Look at the real world. Governments are in a money printing frenzy. US debt has surpassed $34 trillion and is growing by $1 trillion every 100 days. The fiat system is reaching its end. Your dollars and euros are being swallowed by inflation. Central banks in China, Russia, and India are hoarding physical gold and dumping US treasuries. Why? Because they know only hard currency survives when the house of cards collapses. And silver, it's not just money, it's the industrial lifeblood of the modern world. Without silver, you can't build smartphones, EVs, solar panels, or high-tech military equipment. Global silver stocks are being depleted at record speeds. We are in a massive physical deficit. In this reality, silver is absurdly undervalued. Long-term gold and silver are the Noah's Ark of this era. This is a law of physics that no algorithm can hide forever. And this is a life or death but. Before the true bull market erupts, this manipulated paper market will try to shake you off the bus. Wall Street knows the value of silver better than you. They want to steal your cheap chips now so they can profit later. They will use extreme crashes and agonizing sideways movements to make you give up. Jane Street's $1.5 billion dump is not a bearish fundamental sign. It is the final bloody clean out before the major move. They want to be the only ones left on the train to wealth. So what do? Remember these 3 rules. Rule 1, maintain absolute calm and learn to play dead. When the market crashes and news spreads panic, close your trading app, go for a walk, or spend time with family. Never press the sell button when you are terrified. Tell yourself, Wall Street is trying to trick me out of my chips again. A crash isn't an abyss, it's a golden pit for the prepared. If you hold no leverage, they can't harvest you. Rule 2, never ever use high leverage. If you can't sleep because of your silver position, your position is too large or your leverage is too high. Do not use money you can't afford to lose. Do not borrow to buy silver. Algorithms hunt leverage. Even if you are right about the long-term trend, a 20% flash crash will wipe you out before the price rockets upward. Physical is king. If you buy physical silver for your safe, or use cash with zero leverage for long-term paper holdings. Without leverage, the Wall Street scythe swings over your head without touching you. Rule 3, follow the macro trend, not the crowd. The trend is up, inflation is irreversible, fiat devaluation is inevitable, and geopolitical chaos is long-term. That is the big trend. Sit on a sturdy boat and wait for the tsunami to lift you higher. Today's video is a serious warning. I am risking a lot to tell you these truths. I've dismantled Jane Street's plan and the silver market's logic not because I think the fundamentals are collapsing, but because these massive positions are a signal. The next historic move in silver is being engineered. They've set the trap and sharpened their knives. Yes, the game is unfair. They have supercomputers and billions. We have a phone and a salary, but your final destiny is still in your hands. If you don't click sell out of fear, if you don't touch leverage, those geniuses with 160 IQs can't touch you. They will be forced to carry you to the shores of wealth on their own boat. Don't be fooled by the red and green lines. The numbers are fake, but your physical assets and macro patience are real. The ultimate battle between Wall Street and retail has reached its bloodiest stage. Protect your family, save your capital, and keep your eyes open. In this world of lies, your knowledge is your only armor. Don't become a cold statistic in their annual report or a sacrifice for their yacht parties. We will survive the night and watch them be consumed by their own greed. If this helped you see the truth and saved you from disaster, please like and subscribe. More importantly, share this with every friend who is investing or considering selling out of fear. One share might save a family from financial ruin. In the dark, we need to light each other's way. I will always stand with the retail investor to reveal the cruel reality of capital markets. See you in the next video. Stay alert, stay patient, and good luck in this crazy market.